Understanding income tax, a simplified guide. Income tax is a critical revenue stream for governments that is used to fund public services and also meet various state obligations. It is levied on the net income of individuals and businesses rather than their gross receipts. Let's take an example for clarity. Consider a business with annual sales of Rs 30 lakhs and expenses of Rs 27 lakhs. The net income here is Rs 3 lakhs and this is the amount subject to income tax, not the entire Rs 30 lakhs. What's the difference between income tax and GST? While GST is charged on the total value of transactions, income tax is applicable only on the net income earned, barring certain heads of income. Let us now look into the advantages of filing income tax returns. Filing income tax returns has several benefits such as being key for securing various types of loans, enabling to claim any excess tax paid, acting as a document for income and address proof. It is essential for most visa applications, allowing to offset future profits with current losses, avoiding fines for non-filing which can be as high as Rs 10,000. It is essential for buying term insurance and availing MSME registration and loan benefits. Understanding AIS, TIS and Form 26AS. AIS or Annual Information Statement. AIS is a comprehensive record of a taxpayer's financial transactions including income earned, taxes paid and more. TIS or Taxpayer Information Summary. TIS is a condensed version of AIS providing a summary of the financial data. Form 26AS. Details of tax deducted at source or TDS and tax collected at source or TCS appear in the statement. High-value transaction reporting in AIS or TIS. Certain transactions like large cash deposits, high-value purchases and significant property sales are monitored by the Income Tax Department and reflected in the AIS or TIS. An elaborate example of transactions that get reported are shown on the screen for understanding. All cash deposits of Rs 10 lakhs or more in a financial year in savings as well as FD accounts. Cash withdrawals of Rs 10 lakhs or more in a financial year in savings as well as FD accounts. Payment made in cash for the purchase of bank drafts or pay orders or banker's check of an amount of Rs 10 lakhs or more in a financial year. Cash deposits or withdrawals aggregating to Rs 50 lakhs or more in a financial year in or from one or more current accounts of a person. All payments made through credit cards of Rs 1 lakh or more in a financial year by an individual. Purchases of debentures or bond exceeding Rs 10 lakhs in a financial year. Purchase of units of mutual funds exceeding Rs 10 lakhs in a financial year. Purchase of shares exceeding Rs 10 lakhs in a financial year. Sale of immovable properties valued at Rs 30 lakhs or more. Purchase or exchange of foreign currency exceeding Rs 10 lakhs in a financial year. Sale of goods or services exceeding Rs 50 lakhs in a financial year. Cash paid while purchasing any goods or services in a single day in excess of Rs 2 lakhs. Sale or purchase of units of mutual funds or equity shares. It is always advisable to file your taxes if you have any of the said transactions, since the Income Tax Department already has the related information. The next question is, who are required to file income tax return? Please note that the income tax law clearly talks about the income limit only, whereas many of us misinterpret this and are under the notion that since there is no liability to pay tax, there is no need to file income tax return. Filing of income tax return is mandatory if your income exceeds the basic exemption limits, you engage in specific high-value transactions or financial activities as shown on the screen, if the deposited amount in one or more current accounts crosses the threshold of Rs 1 crore, if the travelling expenditure to another country exceeds the limit of Rs 2 lakhs, if the total bill amount towards the consumption of electricity exceeds Rs 1 lakh, if possessing a bank account or holding a capital asset or beneficiary interest in an entity outside India or having signing authority in any foreign account, if business turnover exceeds Rs 60 lakhs, if professional receipts exceed Rs 10 lakhs, if aggregate amount of TDS and TCS is Rs 25,000. This limit of 25,000 will change to 50,000 for senior citizen individuals. If cumulative deposits in one or more saving bank accounts is equal to or more than Rs 50 lakhs in that financial year. Choosing the right ITR form. One must select the appropriate ITR form, ITR 1 to ITR 7, based on the income sources, taxpayer category, asset values, and tax residency. A glimpse of the ITR forms and the relevant information are shown on the screen for understanding. Implications of not filing income tax return. You may face penalties up to Rs 10,000 and interest charges for non-compliance. The tax department can issue notices or perform assessments based on their best judgment if notice is not replied for. It can impact your ability to secure loans or credit facilities. Filing is necessary to claim tax refunds or carry forward losses. This educational content is shared with you by beyondO Global Services, an online platform for all tax solutions. For assistance with tax filing or inquiries, reach us at +91 8113 811315. Would you like to get your AIS and TIS data? To get your AIS and TIS data to your email ID, just send AIS to our WhatsApp +91 8113 811315, and our team will get in touch with you.